Hello and welcome to an Introduction to Technical Analysis, Module 2, Topic 1. In this topic, we're going to be covering the concept of trend, in particular, the creation of resistance levels. So let's get started. So just like the previous topic, we mentioned that the market participants are made up of three categories, namely the buyers, the people that have bought, the sellers, the people that have sold, and obviously the uncommitted, or the people that are sitting on the sidelines that haven't committed to an open trade just yet. So if we take ourselves to a hypothetical situation like we did when we were looking at the creation of support levels, we get presented with the following chart. Assume for a second that the market has been moving along this given line A. Now at point A, we need to understand the factors influencing people to buy, sell, or remain uncommitted. So let's talk about these three categories and their psychology or their psyche. The people that bought at point A, what are they thinking now where the market currently is, where that orange beacon is? Well, they thought or they preempted that a market was going to move higher. But at this current point in time, the market is now lower from where they bought it at, therefore they are now sitting at a loss. Now, as previously mentioned, no one likes to realize losses. So the first thought process is to try and get out in the market where we can break even. So they wait for an opportunity for the market to present themselves with this opportunity so that they can sell what they bought back, meaning they're looking for the market to move back up to where they originally bought the previous or bought the market from. The sellers that sold at point A, they are absolutely happy that they sold at point A because the market has moved lower. But again, going to the psychology of a human being is that we're never happy with what we have bought or we're never happy with what we have sold. And we think to ourselves, man, I thought I wanted to sell much more than what I did sell. I really hope that the market provides me with an opportunity so I can sell more of my stock where I previously sold at point A. So they are resorted to sell more at point A, while the buyers are resorted to sell what they had previously bought in order to offset their position. Now this leaves us to the last category of participant, which is the uncommitted, the people that haven't committed to any particular trade because they were sitting on the sidelines waiting for more and more confirmation and more confidence that they can have from this particular level. They finally realize that the markets are moving down, they've missed it once again, and they are resorted to think to themselves, well, I'm not going to miss the opportunity again. The market has tried to break through that particular level, failed on numerous occasions, and I really hope that the market provides me with another opportunity so I can also enter a short position or enter a sell position in the markets. So the market does just that. The market reverses, it pulls back up to the same level where it originally came from at point A, now sitting at point B. This now gives the people, the uncommitted, the sellers, and the buyers with that opportunity that each one of those were individually looking for. So they all resorted to sell at that particular level for different reasons. The buyers want to offset their position, the sellers want to sell more, and the uncommitted want to implement a first trade or an open trade in that market. So this provides us with a stronger case for that there are going to be more sellers in the market than there are buyers, hence the market being pushed down. Again, resistance is defined as a level where selling pressure simply overcomes buying pressure. Again, this is what we really are looking for. We're looking for probabilities. What is the probabilities of prices moving downwards as opposed to moving upwards? Now, if we can understand the psychology that goes behind the creation of these resistance levels, we can also then work out the probabilities and have the confidence to believe in these particular levels because it's a basic understanding on the psychology that goes behind each one of those participants. So just like the support level, the resistance levels is exactly the same. All right? There are four factors that influence the strength of this. That is the time frame. The longer the time frame, the more important that resistance level is. The volume, the higher the volume that is traded on that particular resistance, the stronger that resistance becomes. Thirdly, the number of touches or the number of tests that price have on that particular level. The more tests and the more number of touches, the stronger that level becomes. And of course, as explained in topic 1, the activity and the urgency between the buyer and the seller also marks or also enhances the strength of that particular resistance levels. So to show you how this operates in the financial markets, if you have a look at that particular chart, this Aussie market and the Johannesburg Stock Exchange, what we're trying to figure out is where are the sellers coming into the market, meaning that we also would like to participate on where the sellers are coming in. And that is just depicted by joining the top parts of the market, or the peaks of the various trends of that market. So here's a very long-term trend. We can see a rising resistance level. Here's a short-term trend. We talk about a red resistance level over here, a medium-term resistance level. Obviously, a lot weaker than the longer time frame orange resistance level. And of course, if you can mark out that purple line, a very much shorter resistance level for the markets. Now, the advantages of this must not be underestimated, because we can take, again, a three-dimensional system over here by looking at a top-down approach. Longer-term picture, into the medium-term picture, into the shorter-term picture. Always having an understanding on where the big picture and the medium picture lies. Thank you very much for listening to Module 2, Topic 2 on resistance lines.